It's 7 a.m. from Fox 35. This is Good Day.
Developing news this morning on the economy. It was another record-breaking day on Wall Street after yet another 400-point swing. Okay, let's start with new information from overnight. Asian markets struggled to find their footing this morning. They opened with some gains, but most ended with being down at the close in the foreign markets. But as we said, the Dow yesterday gained 400 points. That makes it the fourth day in a row where the index had a change of 400 points or more, and that has never happened before. Joining us live to talk about it, Vijay Marolia. He is the Chief Investment Officer with Private Wealth Management in Heathrow. Vijay, first of all, let's talk about these massive ups and downs. What do you think is driving these big swings?
I think it's a combination of things, John. I know there was a lot of chatter about the debt ceiling and the downgrade being the cause of it, and I don't agree with that at all. I think that it's a number of things, some within the United States, some outside our borders, in Europe specifically. Number one, economists and a lot of money managers thought that our economy was going to grow a lot faster than it did the first half of the year. And so now they have to revise their estimates and get prepared for slower growth, and in some people are saying that we may even go back into a recession. People were not prepared for that. The second thing is that the problems in Europe, especially with the banks, are not over, and it looks like they might be getting worse. Everybody's heard about Greece, but now the problems are spreading to Italy and Spain. And the third thing, and I think this is the biggest driver of the volatility, is that funds, and when I say funds, I mean mutual funds and hedge funds, were fully invested. So when a client wants to redeem money or sell shares, they have to sell shares for everything. And that's why you're seeing these large ups and downs. John, I don't think it's over just yet.
Okay, here's where it's confusing for a lot of people, because we keep hearing how bad things are, yet a lot of corporations, the top shareholders, the officers, the directors, people who own companies, buying up their own shares. That shows they have a lot of faith in their own companies. That's a bit of a dichotomy there, don't you think?
I do think so, and I think that it really depends on what sectors of the economy. If we do in fact slow down or go into a recession, certain sectors like utilities, healthcare, consumer staples, they should be okay. But other sectors like consumer discretionary, for example, high-end restaurants, they might be taking a hit. So I think right now is the time to be very selective. You want to go with companies that have strong balance sheets, that have a history of paying dividends and raising dividends. I don't think it's a time to buy the entire market just yet.
Okay, more good signs out there, though, yesterday. A lot of companies showing better than expected earnings. How does it make sense for the common investor when you do see the big downward slide, yet we find out companies are doing well? Help us make sense of that.
That's a great question, John. The stock market is a forward-looking instrument. So it's looking 6 to 18 months out in advance. A lot of the companies are reporting earnings, but that's basically what happened yesterday. So the stock market and the investors are worried about what's happening tomorrow. If things slow down, then the next time these companies report, it might not be so good.
All right, Vijay, I'll put you on the spot then. You say they're looking, what, 6 to 18 months out. How do you feel about the overall economy in 6 to 18 months? I know we can't predict today, but what about a few months down the road?
Okay, right now, I will be honest. I'm very cautious right now about the economy in the second half. I think what's most likely to happen is that the Federal Reserve and the administration, because we know that no political leader wants to go into an election year in a recession and a slowing economy. So they're going to have to pull a rabbit out of their hat. And the last time they did that, we saw a lot of stocks and commodities and precious metals rise. I think we're going to see more of that.
All right, Vijay. Thanks so much. Vijay Marolia from Private Wealth Management in Heathrow. Appreciate your time today.
Thank you.
Amy.